This is the current stock market update for SoFi Technologies, stock ticker SOFI. Before we begin with today's stock market analysis, if you find these educational materials to be helpful, please remember to click the like and subscribe buttons. Leave your thoughts below in the comments section so that other traders can find this information more easily on the platform. We are looking at the hourly time frame here. Each candle represents a full hour's trading period, and we do need to sort of zoom into this shorter term time frame because as we can see, the stock did have a bit of a positive trading session during the trading day today. We did see gains of about 5%, which is a fairly sizable price move for a stock like this. And then in the process, we did also see a break above a fairly important short-term resistance level, which was seen right around $17.90. So roughly this area here. The stock did also close above this area, which is a little bit encouraging. And if I zoom out a bit further here, as we can see, there is a large harmonic pattern that is forming on these shorter-term intervals. And this bounce did roughly keep that bullish harmonic pattern intact. Harmonic patterns are not something you typically see from other people on this platform. But what we're going to do here is to take a look at some of the market's reaction to this information, to this rally that we've seen today. Because if we look at some of the comments that have been posted, I would like to point out how people are actually viewing a rally like this. So number one, as we can see here, this person says, sounds like you got burned by SoFi with an emoji. I think that's kind of funny because I was the only person on this platform that actually took a short sell position in the 30s. This person here says, I was with you until the end. Shit stock, one with $1 billion quarter. What am I missing? Please teach me. Okay, well, that can certainly be done, sir. As we can see here, this is the post that I wrote today for SoFi stock. This recent news that we've seen about the two kind of major stories that are propelling the recent rally here. We've got this FedNow integration and the big business banking headlines. I did a very in-depth fundamental analysis here explaining why exactly this information is not as positive as people seem to think it is. There's also a lot of accounting irregularity that is going on with this name. And in this post, I go into all of this in a way that's very in-depth, far more in-depth than anybody else does on YouTube. As we can see here, we can just look at some of the charts that I've created here. This is not something that you would see anywhere else on YouTube. But you know, I do explain it in a very in-depth way, in a way that's far more in-depth than all of the other YouTubers combined. We're not just talking about one or two people here. We're talking about all of the fundamental analysis that is seen on this platform in aggregate. None of that compares to what we've actually done here just today alone in the Discord trading room. As we can see here, the hyper premium high price for the same growth. This is the stock that we're talking about right now, SOFI, and here we're talking about some of the other competitors. This is an indication of extreme overvaluation, and I will be going into each aspect of this analysis and write-up in a way that's more in-depth. But I just wanted to go over some of the consistent meme stock replies that you see on this channel. Pay no mind. This effeminate fella has an axe to grind. That's not how you spell axe, sir. You can't even spell basic words correctly. And a chip on his shoulder. No, I do not have a chip on my shoulder. We trade real stocks in the trading community. And the stock trades that we have seen, even during this recent stock market decline in the biotech section of the Discord trading community, that would be this area here. As we can see, those gains have far outpaced anything that has occurred during the massive SoFi collapse. But the main comment that I wanted to point out here is right here. And the reason I pointed this comment specifically is because I think that this is just perfectly indicative of meme stock behavior. Because as he says, this person here, I don't know how to say that username, he says, right, the reality right now speaks against you. Okay, so what exactly is this person talking about? Well, I would assume that he's talking about this rally here, which might look good on paper from a very short-term perspective, but this is how meme stock people tend to look at things. Anytime there's a little bit of a move to the top side, the broader market was higher today. There's a lot of downside price action that has been occurring over the last 2 months or so. But when we place these rallies in the broader context, the rally itself is extremely minor and insignificant, as we can see here. I mean, this is a very small retracement of a much larger, massive decline that has been seen. And some people can say, well, the entire market was down during this period. The entire market was not down by 65%, which is what has occurred here. And as we can see in this case, you haven't even moved into the 23.6% Fibonacci retracement zone. This is a much more significant area of resistance. It's going to come into play right around 1950. That does also put you in the neighborhood of a psychological zone around $20 per share. Today's gains finished below $18. So this is extremely insignificant. And as you can see, if you just look at the comment that's made, so this move is just incredibly insignificant from the broader perspective. And if you look at the types of comments that are made here, I mean, this is really just a person that wants to believe that the stock is ready to start moving higher. Right, the reality now speaks against you. I assume that means that he's saying that the stock is not declining just because there was a $5 percentage price move today. It was certainly not a $5 price move, a 5% price move, but that occurs after a major massive decline of about 65%. Finally, I'm just going to go over some of the points that were made in this significant write-up. As we can see today, I'm sure you people know who this guy is. He seems to be hiding for the moment. Because the stock has just done nothing but crash ever since we were into those $30 areas. Here are some examples of the fundamental analysis that I have done on this stock. It's not something you'll see anywhere on YouTube or anywhere on social media. This is far more in-depth than most people can even handle. And in the write-up that I posted today, I'm speaking about some very specific news headlines that have been driving this. You could make the argument that these are the headlines that are driving the recent 5% price move. As I say, SoFi, the Fed now fairy tale versus the math of a slow motion train wreck. While the retail herd is busy high-fiving over Fed now integration and big business banking headlines, smart money is looking at the actual plumbing. What is actually going on here behind the scenes? If you want to understand why today's quote-unquote bullish narrative is actually a house of cards, you need to follow the math, not the PR or the social media hype. Let's just quickly look at some of the points that are made here. Okay, so number one, the tech premium delusion. SoFi's total equity comes in below 10.5 billion. Now, what you're dealing with is a stock that, even with these recent declines, and as I said, we have a stock here that's fallen by about 65% over the last 6 months or so. Even with those declines, you're still dealing with a market cap of around $22.8 billion. Okay, now you should see a very big difference here between these two figures. What is the reality of the situation? Investors are paying a premium of about $12.3 billion over book value. Okay, so that is a significant difference, especially in percentage terms. The breakdown, if you value the lending side, roughly $2.2 billion in revenue, like a standard bank, which typically trades at about 1x book value, you are effectively paying the entire $12.3 billion premium for just $1.4 billion in non-interest income. It's actually less than that. It's $1.39 billion. What does the math tell us? That tells us that this puts the tech and services segment of SoFi with a price to sales multiple of roughly 8.8x. In a world where high growth fintech peers are trading at roughly 4 to 6 times price to sales, you are paying a massive social media tax for a business that is increasingly relying on its balance sheet, not the underlying technology. As I've said many times, this is an online banking app. This is not a technology company. Now, if I continue here with further points, and I'm not going to do all of this in this video, but this starts to get worse. This continues to get worse because, as we can see here, the fundamental ghost, the real free cash flow figures versus the net income figures. Let's just look at some quick numbers here. Okay, so GAAP profits, roughly $480 million on a trailing 12-month basis. Well, what does the free cash flow margin tell us? Well, it's actually a negative number here, roughly negative 1.1. The divergence. This is the ultimate social media hype indicator. SoFi is reporting, quote, accounting profits while it's burning cold hard cash. And then in addition to that, you're seeing significant share price dilution, which is something else that I cover extensively in this write-up. So how exactly are SoFi investors being tricked in this scenario? Well, this is a classic symptom of aggressive accrual accounting. Overall, what this tells us is that SoFi will never be able to pay dividends or buy back shares with quote-unquote accounting profits when the cash is leaking out the back door. Okay, and this is the type of thing that you need to see with a financial stock. I've said many times, I don't know why people are so obsessed with a financial stock when there are so many other asset classes or aspects of the market that are more interesting and more explosive. So for example, right here, the biotech section of the trading room is where we do most of the work in this trading community. But if for whatever reason, if you are obsessed with trading financial stocks, you need to see dividends or share buybacks at some point. SoFi does the exact opposite. And if I look at some of the other charts that I've posted here, I'll just sort of zoom into one right at the end here. This is the dilution treadmill staircase that's been seen with SoFi from 2021 to 2025. As we can see, the total dilution during this period has been worse than 118%. If we just go back to 2021, this is not a typical financial stock chart. Typically, you'll see this number moving in the opposite direction. Financial institutions will buy back shares. SoFi is doing the exact opposite because they're completely interested in diluting shareholders rather than building shareholder value.